Welcome back. In today's video, I'll mainly cover some of the trades I took today using some of the key concepts I've covered in the previous video in the DRT and OTE, and show you a couple examples that I've taken in the second week of June. And I think in June compared to May, it's a lot more cleaner. There's a lot more setup you can take. If you take a look at May, essentially NQ did not move anywhere. We moved, I think, roughly less than 1%, and resulting May is probably one of the worst months this year to trade. A lot of user either set out, didn't take a trade, or a lot of user forced trade and then blew their account. So, but June is, we've been getting picking up some volatility. It's still ranging a little bit, but there's at least more setup to take. And today, mainly, I was kind of give you my top-down analysis on what I took this week, and also how I leveraged the key concept I've covered in my previous video. And then if you haven't checked out the previous video, you can take a look. There's a DRT and plus an OTE video, building range theory. Okay, so jumping right in, today in this current time frame, this is a 4-hour time frame. So time frame that I marked, mainly what I typically do, and before a week start, I'll mark out the weekly high. So if I jump to the week, right, this is this week high and this previous week low on first week of June. Okay, and then diving in, so I jump on to 4 hours. I skipped the daily since I didn't see much in the daily. In the 4 hour, this is where I see something that grabbed my attention. This is on Thursday going to Friday. This zone got respected, so leveraging the order block of this on the 4-hour time frame, I see this getting respected, and mainly is this. Also, there's an OTE. So you can see we are trending upwards. Previous week I have covered this as well as one of the example. You can see once the significant low and significant high was formed, this is essentially our dealing range of this. Once past this points, this will be our dealing range. So anything I want to see after this, expecting to pull back to OTE or 50% at least to the discount zone, and this is where I have an entry and see if it respected. So you can see this respecting the OTE and also in respecting the discount zone. Next thing of the next week that showed up, same thing. Once this is completed, sweeping this low, this become a significant low, and then what I want to see is this significant high to see if it continue being respected from this low to this high. When it's taken, you can see on Thursday going to Friday, previous week, on Thursday, you can see respected this order block over here, and then also the discount zone, and then it shows significant movement upwards. So going to the week, what I want to keep in mind is these are my targets. So you can see the weekly high that was formed last week. This is my targets, and also this high is my targets going into Monday, right? So what I want to see is if I can get some sort of a retracement in the lower time frame into a OTE zone, and then look for a trade. So going down to 30 minutes. So we can see on Monday, this is the 30 minutes. We can see these equal low are swept. That's what caught my eyes in the pre-market on Monday. So this is, I view this as a protected low. Now I want to see some sort of retracement back to the OTE. I don't expect the price, if it continue to grab these highs, I don't expect it to have price retrace all the way back down to this low. This should be a protected low, right? So I'll use this as my OTE. So I want to see some sort of retracement back into the OTE zone around here to take a trade. So let this play out. Okay, so I'm gonna slow down a little bit. So you can see this is essentially point-to-point precision on entry. I have a limit order set at OTE, and my stop is right below here at the protected low, and then I aim for a 2RR. So this is my initial profit target. Always take some profit off the table once you reach at least 2RR, and then rest of my main run was equal high. And once this, I'm all out. I didn't aim for the weekly high because I don't believe there's a chance that will push all the way up. Once this is grabbed, I don't believe we'll get there. I don't think it did. Okay, yeah, it didn't. So going to the next day. So this is Monday. This is the first trade I took. Right. So I'll leave this here. And the next day on Tuesday, same thing. On 30 minutes. So same thing. 30 minutes. Fade out. Fade, not yet. I think this is close. So this is close to the open. So we can see from before the market open, it already swept the high. So I'll remove this. This is the high already got swept. One thing I'm paying attention to over here is I want to see the price retrace to this key zone up here. I expect the bullish to continue to push the price higher upwards as long as the bottom of these range are supported, right? So during the pre-market, I can see one thing is these equal high. So let me remove it here. This low and this low, these stack equal lows. Once it get taken, I see this as a protected low, and also there is a break of market structure break above here. So what I want to do is I want to look for some sort of long entry. So what I did using this order block, and my entry was essentially on this candle, this to this. So I'll jump down to the 5 minutes range so you can kind of see where I entered. So this is the 5 minute chart time frame. It was around here. Kind of hard to see. This is my entry for the first targets. And then I long from OTE here, stop at this low, and then I target, as always, Q. So this is my initial target profit. And one thing I want to point out, here on this trade, let me go back to 30 minutes. On this day, I do not expect the price, and that's something pull out from a lot of traders. If you try to aim for this high on this day, most likely you will not get there. And then the reason why is if you look to the right, when you have all these relative equal highs taken, once these are taken as liquidity, I don't foresee the price majority of time they will retrace all the way back here to this significant high, right? This becomes a significant high. I don't foresee seeing that. So my final target was around the OTE. So if I draw from this significant high to this significant low, so this took liquidity, this took liquidity, this is significant high. So this is my dealing range, right? So this is my dealing range. My OTE is here. I don't see the price going past OTE. I expect the price to go OTE, respect it, or even push a little bit above it. There should be no candle close outside of this OTE zone, and then go back down, right? So I took all my profit off around this place already. So it already gave me a 2RR, right? So it's more than, let me see, go down to lower time frame. This is more than 2RR, but I only aim for OTE, so which is here. I got out at roughly 2.2RR, but this I think ended up being like a 2.6RR. Yeah. I don't know if it's gonna go a little bit higher. Let me play it out. Okay, yeah. So here you go. If you have aim for this all the way top here, enter this position on this day, you should not be aiming all the way up here, right? You can see price respect the OTE, pull all the way down, grab all this liquidity on the sell side, right? All these lower resistance liquidity. Once these are grabbed, right, we respected the larger order block. So clean this out. respect this other larger order block, and then move up, right? And then grab this liquidity. So, if that makes sense. Something you always need to keep in mind is never just blindly aim for a high or a low. Whenever there's a significant high that is taken, or liquidity that's taken from either buy side or sell side, there will always be a retracement into OTE, and then go back down. Well, in this case, back down, or opposite direction that you're trading from. Go back down, swipe the opposite of liquidity before moving higher. So obviously, the overall trend is bullish, which it makes sense that once this is grabbed, it will go down, rebalance, back up, go down, swipe all these sell side liquidity, lower resistance, and then go back up, getting the significant high, right? So I didn't trade this leg. I usually don't trade past 12. So my entry was in the lower time frame of, if you take a look, at 2 minutes, I did not aim for this all this big move, right? And I'm saying you don't even need all this move to make a profit. Just understanding this small concept of DRT and OTE, you can find a lot of optimal entry that's A+, right? In many time frame. But ideally, I would recommend finding a setup within 30 minutes or above. So I found this setup right within the 30 minutes. Let me go back. Good. So you can see, racing the bigger time frame. This is the order block that I'm trading at in the 30 minutes. Once it retrace into the OT zone, right, I look for entry at around 60%, and then I just left my limit order here, and then you can take a look on the post I posted on Twitter or on my social media. My entry was essentially at the bottom of here, and then I got out at the top of OTE, and I knew it's not gonna go there. I mean, there's no 100% predicting it wouldn't just go for this high, significant high, but majority of time it would not, right? Especially when this liquidity is grabbed. My expectation was go up here, rebalance, and then actually go all the way down here, grabbing this liquidity. But what happened with this, it didn't even end up grabbing this low liquidity. It just rebalanced into the OTE of this significant dealing range, and then respecting this order block, and then move back higher. So that's how strong, how bullish this week trend has been. So don't fight the trend and just trade the trend. Trend is your friend. And then we'll continue moving forward to, I think, Wednesday's next. Yeah. Wednesday's next. Wednesday, I also took one trade. So Wednesday was very straightforward. Same thing. Once it's broken, right? This is a significant high. This is a significant low, right? Same thing. When pre-market open, I see this liquidity got swept. So this week setup is very straightforward. You can see the same setup every single day, right? So same setup as before. The liquidity got swept, creating a protected low at the pre-market. Same thing on Wednesday as well. Same thing on Tuesday, same thing on Monday. So it's just same pattern for this week. It's pretty straightforward, and it's all bullish for majority of the trade I took. So on 30 minutes, this is my zone that I want to look for. This is point of interest I was looking for, and this as well. And once this was taken, let me take this. So this is the data high, A30. So I took this significant low, this, and this is my OTE. Okay. Color. So this is my OTE, and my entry was at, I put a limit order at this order block, and my stop is at this. I could have put data low, but I didn't. I just put it on here. Usually data low, I don't like to use that wick. So this is also close, so I just put it here, and then aim for 2RR. Let's play. So hit my target, right? And then here's something I want to highlight. On this day, same thing. Once this is swept of this high, typically, same thing, you want to be very careful at this OTE. So I'll highlight this and I'll remove the... So you want to be careful. You see how it went to OTE and then it just reversed, right? Same thing as here. It went to OTE and just reversed and grabbed more liquidity. So it went down to grab this liquidity. But let me play it out. From this day, I remember once it grabbed OTE and then swept this liquidity, the price didn't push higher. I think it just went lower. Yeah, there you go. So these are the things that you need to keep in mind. Not always will aim for significant high. So for example, this significant high was able to be grabbed on this day, right? Once it went down, grabbed these significant lower liquidity runs, and then it went up to grab the significant high. But on this day, it didn't do that, right? So in this day, if you do that, you have been screwed. You will not be able to be profit. And then if you have the tendency of just keep adding onto your loss, you are just gonna be building bigger loss because it will never go back up, right? So on this day is a clear example of that. And then on Thursday, I did not take any single trade because there's no setup. We're kind of stuck between the range. I didn't like any of the trade. So yes, Thursday I'll let it play out and I'll kind of explain why I didn't take any of the trade, and then if possible, there's trade I could have taken. So this is Thursday. There's really no trade for me to take today, right? So what I was looking for was I want to see some sort of liquidity get swept. This didn't get swept to create equal low. All right, so what I'm expecting is maybe in the New York opens in the AM session, it's gonna sweep it, and then there might be a trade in PM, but it didn't. It ended up just staggering up here, creating a range, and then later on just for it to create all these lower resistance, right? All these are lower resistance that got swept during the outside trading hours. So in this day, Thursday, there's really no setup, and then Friday there is setup to be taken. I'll show you the setup you could have taken. So here it's very straightforward. Saturday, once you came in here, you can see it pulled back all the way to this higher time frame point of interest where it's respecting it. This is where I drew my attention, where I also have a market structure shift, and then this create a bias of I do expect the price to continue higher, but there's something I have to keep in mind is once this liquidity swept, right? These are the range. So same thing again, OTE, right? This, I have a strong conviction going today's, so today and Friday, I have a strong conviction that if this is respected, this order block is respected, right? It will rebalance to here. So this is only trade I have taken on today's trade on Friday, and then I expect the price to push back down. Consider in the overall higher time frame where this significant high is already created. I expect we might either range or go all the way back down and then swipe this equal lows, right? I see this equal low generated as liquidity to be swept in the futures. So in today's price action, I didn't, same thing as Wednesday and Tuesday. I was very mindful on where I take my profit. I didn't aim, there's no reason for you to aim for this high, right? There's no point. Even this high, it's just that the price is not ready for it. Okay, so let me point it out where I enter my trade. So going to 5 minutes. So this is the 5 minutes time frame, and this is the zone I'm interested in. So I have this here, and then enter at this OTE. So this OTE I enter at pre-market opens. Okay, mark this as different color. So this is OTE zone I'm looking at enter, low the bottom wicket, enter straight at the bottom, and then my stop loss is at this low, so this will be my protective low, and then I aim for 2RR. Okay, and then the rest is gonna be at the roughly 61% retracement. So this is my final PT. So you can see this is a 3-hour trade overall, taking partial and some runner at the end up being like a 2.4, 2.3 RR average, right? But it's more than 2 RR. It's a good trade, and it makes sense. A+ setup. So next thing, I want to let it play out and see if later on the day it did break above this OTE or not. Okay. So here we go. So this is essentially end of today. Let me stop the replay. So you can see the reason why I never aim for this significant high, because it's not ready, right? Once you have a huge move overnight, most of the time what you expect is you will have a rebalance range. So you will, if you see a strong bullish and is respecting a significant higher time frame levels, you go down to a lower time frame level, so 30 minutes. This is the key interest zone I'm looking at, and then I aim for OTE. I don't aim for this high, I aim for OTE. The only time I aim for significant high is, let's say, for example, on Monday, right? So on Monday, you can see this is the significant high, right? And then this is the protective low. The only place it's gonna go is gonna be a significant high because it already rebalanced, right? So once you have this rebalance, price of this significant high, significant low, once you rebalance, pull back. If it still shows strong bullish momentum, most of the time it's gonna go for this significant high, right? Same thing for here, right? But for obviously for Tuesday, when this significant high was taken, I respect to just rebalance and then pull back a little bit further. So I took it all off at this OTE, and then same thing as here. And this day, obviously, is what I expected on Tuesday. It didn't even go to the significant high. It just traced all the way back down. There's nothing on Thursday, and then same thing. I expect to retrace with such a big move overnight. I expected the price to retrace and rebalance it, and then pull back down. So going into next week, what I'm expecting is, if this significant level for the low is continue being supported going next week, I expect all this generated relative equal lower resistance high will become liquidity zone that I want to target. So if this bottom of this higher time frame, you go to the 4 hours, if this is respected, what I'm seeing is going back down, swept this liquidity, and then moving back up slowly, grabbing this, grabbing this, grabbing this, and then targeting this point of interest on the higher time frame that I have marked out. So in short, hopefully this is helpful, give you an idea how to use dealing range theory and also OTE into your trade, and just having these two alone is more than enough to find A+ setup, right? My bread and butter is essentially OTE and DRT, and also just order block and breaker block. I don't even use fair value gap. Fair value gap is not necessary because, I mean, fair value gap essentially just rebalance into price. But if you're understanding why price rebalance, those essentially, yeah, see, this is the fair value gap, right? Why price rebalance? There's really no point for you to even just, okay, take a trade because there's a fair value gap, there's an inverse fair value gap. I know I'm not saying it doesn't work, but over the years, I find what makes more sense is understand key point of interest. So the point of interest that you will draw on the higher time frame, those are only places that you would take trade, right? So on each day, I don't just take every single fair value gap or every single whatever confluence you see. I always wait the price to pull into my confluence and then my point of interest, and then I have some sort of confluence that align with my point of interest in the opposite direction. Then I take that trade. And then also if the risk and reward makes sense, so at least 2 RR, and it makes sense, I will take those trades, right? That's consistent and following a system. I only usually take one trade a day. If I have one good trade in the first trade, I'm usually done. I don't take the second trade. If I have a break-even trade, I'll take and look for another trade if there's another setup. And then sometimes if I take a loss, the second trade I will be careful to see if there's another trade. So typically with my system, if the first trade doesn't work, typically that means I'm either reading the direction wrong or today is just choppy, right? So taking a look on Thursday, there is no setup I can take. There is no liquidity sweep at all. And then even let's say if I want to take this trade from here, right? None of the trade pull back to OTE. I'm not going to chase price just to get a entry. There is no reason for me to do so, right? I always wait for the trade to come to me, and then I take the trade. I don't chase movements, and I don't chase setups. Okay. So take a look and review this week trade. And if you don't know what's DRT or OTE, feel free to take a look. The video I posted recently, those will explain what exactly is stealing range theory and how do you identify where is the range that you want to look for, and also based on that you can zoom down using OTE to find out where is your trade going to be expecting to go. All my trade are limit order, so if you can take a look at my post in my Instagram or on Twitter or even on YouTube, you can see all my entry are limited order. I do not do market order. It's the feel of the spread of sometimes future is not great if it moves too fast. And then also, if you know where the price is gonna go, there's no point for you to do market order, right? Every single trade, if you take a look, I put majority of it is limit order. The only time I use market order is if the price moved too fast or it came close to my limit order, but the price moved away from me and I know this is the wrong and then it won't pull back later on to fill me in, I'll put market order. But majority of time, I'm always using limit order because this is where I expect the price to go, and I don't expect the price to move further towards against me to a certain risk. And then I just set the order and then step away and let the price either go to my PT or go to my stop loss. It's that simple, right? Okay, that will be it for this week video. Hopefully this is helpful. If you find this video helpful, please leave a like, subscribe, and also comments whatever educational video that you think you want to see more of it. I'll try to do some concept. I know in this video there's quite a lot of concept I cover on different confluences. If you want to see any particular ones you want to see, put in the comments. I'll try to get to those based on what most of the user want to see their trading. All right, happy trading, stay safe.